Would you recommend going all in a single or few trades or spreading across multiple sectors as long as the sectors are bullish? Excellent question. So I've been to a point where I've been maybe not completely, maybe about 70-ish% all in one sector. And I'll be honest with you, I felt nervous. I felt really nervous because that's a lot of correlation risk right there, right? So let's say you got trades in XLF, Morgan Stanley, Citibank, and Wells Fargo, right? So maybe you got 5 trades on all in one sector. That presents itself a lot of correlation risk. Now, the question you need to ask yourself is, are you comfortable with that risk? For me, I go big, right? I go really big. I mean, a lot of times my position sizes are 15, 20, maybe even 30%. Now, granted, I can't have a portfolio of 5 stocks with each having 30%. I understand that. But what I'm trying to get across is when you lever that deep into any one sector, there does pose a real strong correlation risk for issues that can come out of it. Now, that doesn't stop me for doing it, but it does put a little hair on your chest, I guess, if you want to put it that way. Reason that it doesn't stop me is because I know where I'm going to get out. And for example, Nicholas Darvis in this book here, he would actually tell you the opposite. He'd say if a sector's doing really well, this is how I made $2 million in stock market. He would tell you if a sector's doing well, just buy every stock in the sector and then just pick them off one by one once they stop acting correct, right? All stocks are bad, but every once in a while they act right. And so his motto is all stocks in the sector are good, but the ones that aren't acting right, I'm going to bounce those and I'm going to keep the rest. So that's kind of my mentality. It does get a little bit stressful. I totally get it. It's a very, very good question. But as long as you know where you're going to get out, it really shouldn't present an issue, right? I don't have a portfolio. I have a group of stocks that are currently acting right, if that makes sense. Let me continue on with a couple other questions. How to apply sizing to approach for shares, but not to options. As for me, options are not available with my current broker. So that was from Nicolay. So I went through this morning and I fully stand by what I said, which is you can put on giant positions, humongous positions, way bigger than you think you can put on, as long as you know where you're going to get out. Now, I wanted to pull this back up again because this morning in our example with Coke, this position sizing formula actually said we could put on a 99% of our account position size. And you're like, what in the cotton picking minute is he talking about? There is no possible way that I would put 99% of my portfolio into a single position. So this formula right here would beg to differ. So it says if you had $100,000 and 5% that you're willing to risk per trade, $100,000 multiplied by that risk. So you're willing to risk, like how much loss you're willing to take is $5,000. So you would have $95,000 if all hell broke loose. You would still have $95,000 in your account. Now you divide that by 2 times the ATR. ATR changes, right? ATR is based on volatility. So if Coke has a really low ATR, you can trade much larger position size. So this says 98%. If Coke has a high ATR, so we'll change this, we'll overwrite this. Let's say it's a 25 ATR. Your portfolio position size would only be 7%. So let me back that up here. The current ATR value in Coke is 1.83, give or take. Now, what does that mean? That means over the last 14 candles, that's default. The average true range, the average volatility is 1.83. So $1.83 on average per day it's moving. Sometimes it's up, sometimes it's down, sometimes it's more, sometimes it's less. But on average, it's $1.83. Now, when your ATR is really small, when your volatility is really small, you can trade a big position size. But changing nothing but ATR, taking it from $1.83 to let's multiply it by 10, so 1830. 1830. You would go from a position size of nearly 99% to 9.8%. Why is that? That's because it's saying, okay, you have this much volatility. The stock can move $18 in a single day. You don't want to be trading a big position when a stock can move $18 in a single day. So you want to trade significantly less. Now let's look at Tesla. In Tesla here, and let me delete this one. In Tesla here, the formula still stands. This is the exact same formula here. But the ATR is at $21 versus $1.83. And so looking at this share size here, you're saying account balance multiplied by risk percent divided by 2 times the ATR gives you the number of shares. So that's how, in this exact same formula here, you can figure out how many shares to trade based on that 5% position size. Now, if you were to lose the trade, the math from entry point to the half ATR point, so that's my exit point, is a half ATR, is actually much less than 5,000, much less than 5,000. This is by design. It's by design there to say, okay, if things go wrong, if there's a gap down, if something happens, I don't really want to lose 5,000. But if things go right, I can hang on to it and I can let it run as far as it can. And so if everything else being equal, you could have a 32% position size in Tesla versus a 98 position size in Coke. Now, I'm going to break your brains after this one. This is the reason why I trade options. This right here is the exact reason why I trade options, because how many trades between these two could I take? One. One in Coke, none in Tesla, or 3 in Tesla, none in Coke, and that's it, right? That's not much, right? I would love to trade more than one stock at a time. I would love to trade 6, 8, 10 stocks at a time, because then I have opportunity to have concurrent gains and not just sequential gains. So with that being said, if we do options, we can do a lot more. So let me pull up my trading account real quick in TradeYer. Let me log in. And for those of you who are just joining on the live and you see these hashtag donkeys all over the place, that's because I'm giving away an outlier hat, and the secret code of the day to get entered to win the outlier hat is hashtag donkey. So if you haven't put hashtag donkey in, be sure to put in hashtag donkey. Yeah, that's just me being goofy there while this loads up. Initializing command center, loading trading view, loading account view, loading trade ticket. All right, let me say hi to everybody real quick still while that's loading up. There we go. Donkey. No, Randy, we don't have any golden ticket trades today because the SPY is still trending down. But boy, does it look like next week is happening. Boy, does it look like next week is happening. So let's go into Coke. And position sizing has been on a lot of people's minds, and I completely get it, especially right now if we are about to start trading, long or short. I would be looking around the 80 delta, which puts me right around the 67.50 strike right here. Now, we're going to focus on position sizing in this conversation here. If we were looking at this one and I spent $5 on the trade, let's say $5 per contract, and I bought 17 contracts. Insert another column here. Let's say option size, option dollars. So we'd say 17 times 500, because that's what it would be, $500 a share, or $500 a contract. I could have nearly equivalent of 98% of 100,000. Let's call it $99,000 worth of trading size for just 8,500. Not bad, right? Not bad. So I can put on a position that mimics this for just $8,500. Now, let's do it in Tesla. Let's do Tesla. Because I couldn't put on a trade in Tesla if I had my full boat in Coke. Let's go to the 80 delta. This one's going to be a lot more expensive, of course. $42 per. Good gravy. $42. But you know what? I'm only putting on one. So that's $4,200. $4,200. Right? 42 times 100, 4,200. Hey, look at that. I still have like 88% of my account available to trade. How cool is that, right? So then I could do something in AMD. AMD. I could do something in American Airlines, I think is AA, or it's Alcoa. It doesn't really matter to me. I don't care. Point is, I can do more work here. So I could go like to AMD, and I could buy, how many am I buying? I could buy 4 option contracts around the 80 delta. So that would be 1415. So 1415 equals 1415 times 4, which means that's only $5,600. And then if I do the same thing again in AA, which is either American Airlines or Alcoa, and I do not remember off the top of my head. Let's do this one here, 370. Okay, so I could buy 370. 14 times 370 equals this times 370. Change that to dollars. So here I have $23,000 of actual trades on. Hear me out. $23,000 of actual trades. Yet, that's only four. That's 4 positions that I have on. Whereas before, if I was just buying the shares, I wouldn't have any of these on. I would just have like one. I would just have Coke on. And now I still have room. I still have tons of room. Now, normally they're not this. In fact, let me do one other thing here. So this is actual option portfolio size. So what I wanted to see was this divided by this, and then lock that down. And then we do this here. That's what I want to see. So 23% of my account is put in trades, which means the other 75-ish percent, 77%, I can still put on trades with. How cool is that? This is why I do options. Do you see the leverage that you can get with this? Isn't this cool? Isn't this cool? That was a fantastic question. Yeah, Jeremy, be all in on this. I played on paper trading today with some options, and I placed 20 calls on NVIDIA and 20 AMD, and so far the account went up like $12,500. Cool. As long as you have a plan and understand that paper trading is there to help you learn the mechanics. I once blew up my account. I can't remember if it was the first or second time, but I then took 6 months, had to have been the second time. I then took 6 months where I focused in and I paper traded every day as if my life depended on it. And I figured if I could make money paper trading for 6 months, treating it as if it were real money at the other end of it, I would be okay. And I was. So if you are going to paper trade, make it feel as real as you possibly can. Brian asks, what percent of your account would you have in trades at one time? Example, 5% risk. How many individual trades? So that's kind of what I was trying to get at here. So even though these are teensy weensy. Like I'm normally much bigger than this, but that's because the ATR values are so much higher than they used to be a few months ago. In fact, let's look at Coke's ATR value. Let's do a little experiment here. Let's look at Coke's ATR value. Oh, okay, Mikey Mike. Those trades are all over 5%. They are. Well, almost all of them are. But that's because I'm not planning for these to go to zero. If they go to zero, I have failed everybody. I am willing to take $1,250 worth of risk for each one of these. This is my portfolio risk. This is my option portfolio size. This is my share size if I were to go in with only shares. You see how much of a difference it makes to use the options. Randy says, paper trading is totally different from real money. Yeah, and that's why I say you got to get like serious. Time to get serious. I have 8 minutes. Man, I could do this all day, every day. But let's give away the donkey hat. Let's give away the donkey hat. Who's gonna win a hat? Let's see. Nico. Hey, congratulations, Nico. I know Nico is here like all the time, so congratulations to Nico. Hey, do me a favor, Nico. Shoot me an email over at support@outtlyr.com. And then we'll send that to you out on Monday. So Nico, and none of you other bozos try to catfish your way into being Nico. Nico, congratulations. I really appreciate you and everything you do for us, showing up live here all the time. But let's now talk about our weekly winner circle. So every Friday, I want to showcase you. I want to showcase weekly winners circle. Where is that at? Share your big wins. So what we do is we ask you to tell us how you are using OVTLYR. And for that, we want to reward you. So we're going to have a quick giveaway for those of you who have posted in the Share Your Big Wins section of our Discord. And I want to share a few of these names real quick after I find my spreadsheet. It's too late, by the way. You cannot add your name to it because the names have already been permanently etched in stone here. Okay, so Surfer Jeff, Dave, Albertone, Joey, you can see all your names here. David Williams cannot be on here twice. Skinny Buff Guy, all of you guys are awesome. And if there is a girl, that would be weird. I don't know what to do with myself if there is a girl, because 92% of our audience are men. Okay, but let's share some of your stories here. Like Party Van, he had 8 out of 10 positions in the green. Cutting losses early is like magic. I'm telling you, this is actually something that I figured out. It was a while ago, but I remember the first time I had that feeling. Or I log into my account and it was just full of winners. And the next day, you know, I log in, it's full of winners. And the next day you log in, you see that one's losing, you bounce that one out, you put a new one in. You come in the next day and it's full of winners. And there is such a psychological edge, which you may not have experienced before, where you log in every day and you see more money in your account than you did the day before. It's real. It's real. How do you do that? You put on the trades to the best of your knowledge with your setup in the way that you feel comfortable with trading. And if they don't work, you bounce those dudes out as fast as possible. And you keep the ones that are working. And you rinse and repeat. You come up with a strategy, something that you feel comfortable with doing every single day with consistency and discipline. And then if it's not working, that's okay. Don't take it personal. Just bounce the trade out, and put in a new trade. And then you get used to seeing winners. And it's really great, actually. Run Whack D says, thought I'd post my first trade following the OVTLYR trend template. I purchased calls on Hood and got stopped out this morning with a 20% gain. That's not too bad. This was the first time I purchased options versus shares. And so while I probably could have handled a bit looser stop in place and continue to let it run, I definitely didn't want to take a chance of having a winner turn into a loser. Thank you, Chris, for all your content. The first time I watched one of your videos, you went over the trend template, and it wasn't just a light bulb that went off. It was like a stadium lighting on a broom closet. Looking forward to sharing many more wins in the future. So congratulations to that. And now, what is the OVTLYR trend template? It's the 10-period EMA over the 20-period EMA over with price over the 50-period EMA. And you can see right here. All right, this will tell you the direction of the trend. Now, there are days like this where it gapped down, and there was clearly some sort of news catalyst that happened for that. But if you were following this trend template here, you still would have been able to catch all kinds of gains. And when it's moving down like this, like so many stocks have been this year, you don't have to get taken to the cleaners. So let's give away a $10 Amazon gift card here. And let me double check that the latest ones are on here. Haunted Potato, Craig, Nick, Haunted Potato. Where's Craig? Hang on. Let me update this real quick, right quick. Since Dave was on here twice. Whoa. That's Nate, Craig, Ranger, Haunted Potato, Run Whacked D. I don't see him on here real quick. Run Whacked. Party Van's on here. Jim S. Okay. We're good now. Jorge. Was Jorge on here? You guys with your last minute submissions. Okay, cool. We're done. Jorge's the last one. So let's move these guys up to 1. Let's update our numbers here. And so we're going to go to random.org because I'm a random guy. And let's see who of you guys is going to be the winner. 1 out of 23. Winner is number 17. That is Jim S. Congratulations, Jim S. You just won yourself a $10 Amazon gift card. I would super suggest going and getting one of my 5 favorite trading books. That would be a great use of that gift card. So congratulations to Jim S. And let me write this in here real quick. Congrats to @Jim S. I hope that's right, Jim S. For being this week's winner. Now, April's already gone for the day, but she will send that to you on Monday. So congrats to Jim. All right. Now, let's make a quick announcement about OVTLYR University. This is really cool. We just opened up OVTLYR University for enrollment. If you come over here into the Discord and you go to the trading section, then you go to OVTLYR University. I have a post right here talking about things that we would ask of you. Number 1, it's totally free. We do want you to have your camera on. Come prepared to ask questions and actually learn. You consent to being part of the recording sessions, which means we're probably going to replay them on YouTube at some point. And there are only 10 slots per cohort. Now, in the alpha cohort, I have reached out personally and gotten two people, two yeses and one maybe. So there's 7 or 8 spots still available for the alpha cohort, and I want you to sign up and let us know that you are interested. Now we have an application form right here. It's not going to ask for any money. It's not going to ask for anything particular, other than you just basically committing to the fact that we are ready to start building up OVTLYR University, and we want you to be a part of it. We will have internal meetings on who is going to be in the first alpha cohort, and the days and times of the lessons will be basically what works best for the group. But the main point here is that we want to make this the very best experience possible. In fact, I am really trying to turn this into the complete turtle trader for 2025 and 2026 and 2027 and for the foreseeable future, where we give the absolute very best training on any platform, and it's going to be free, and it's going to be on YouTube, and you can actually watch along and ask questions and learn along with everybody. So even if you aren't in the alpha cohort, you're still going to be able to learn a ton from the alpha cohort, and you might be in the beta cohort or the sigma cohort or the whatever cohort, right? Or the chicken jockey cohort. I mean, my kids say chicken jockey like literally 74 times a day at this point in my life. So I'm very excited about OVTLYR University. Be sure you go into our Discord and hit the OVTLYR University there. Click this link and sign up. And of course, don't forget, we are giving away a free year of OVTLYR over at outtlyrddeal.com. outtlyrddeal.com. We're giving away a free year of OVTLYR and $1,000. As you can tell, we are doing our very best to give you everything you possibly can. You could even trade with that $1,000, maybe turn it into $10,000. Who knows? Who knows what you could do with that? But over at outtlyrddeal.com, we want to give you the opportunity to win a free year of OVTLYR 3.0. And then first runner-up gets $200 worth of merch and my 5 favorite trading book bundle. Second runner-up gets $150 worth of merch and my 5 favorite trading book bundle. So we have so much going on right now. And it looks like the market's about to turn. It really looks like the market is on its way up, which if you watch my last two Sunday videos, receipts are on YouTube. I specifically was saying, I think we had found a bottom, and here we go. And here we go. So I'll be making another Sunday video here in just a little bit. So y'all be on the lookout for that on Sunday. But we got a game plan. I think we're ready to roll. You guys have a fantastic afternoon. Be sure to click one of these recommended videos up here. And I'm sorry I got to run early, but I got to go do it. I got to go do dad duties. So I'll see you back here on Monday. Have a great weekend.